So I want to talk about now the stock market and why it was created. Because over all of the decades, the more than 25 years I've been investing, when I meet investors and I talk to them about the stock market and what we do and how we invest, it's very apparent to me that most people don't really understand what the stock market should be used for. So let's go back and do a quick history lesson about the stock market. It was created in the early 1700s under a buttonwood tree in New York. And essentially, it was just simply a group of people that got together that wanted to create a vehicle where mums and dads could become fractional owners of companies. So they may not be able to buy the whole company, but they can buy part of a company. So they created shares. They created the stock market that ultimately eventually morphed into the New York Stock Exchange on Wall Street that we see today. The stock market today is merely a market of companies. Every stock on the stock market is a company, and every one of those companies started out as a private business, just like the business that you either own or you've worked for in the past. Private businesses become publicly listed companies on the stock market for all sorts of reasons. Sometimes they like to raise money to grow the business. Sometimes the owner of that private business wants to exit and sell 50% of it or 100% of it, so they turn it into a publicly listed company. But don't ever lose sight of why the stock market exists and how you should interact with it. The stock market is not there to instruct you on what to do. The stock market is just simply there as a place for you to go and say, I would like to become a shareholder in that company. You should not be basing any decision of your investing based on if the stock market is up or down. Because we don't own the stock market. People say to me all of the time, Andrew, what's the stock market going to do next week or next month or next year? And my answer is very frank and very straightforward. I don't care. I don't own the stock market. I own companies that are listed on the stock market. So please make sure that you don't ever allow the stock market to instruct you on what you should be doing. And what I mean by that is if it's up or if it's down, or if it's down 10%, 20%, or up 10 or 20%, who cares? What's important is where your money is being invested in the companies that are listed on the stock market. Now, of course, we could become an owner of a private company. We could own some shares in a private business, but it's more challenging than investing in the stock market because in the stock market, we can exit and enter whenever we wish. We can own one share, we can own 1,000 shares. So there are so many benefits of investing in the stock market, but so many people don't understand why it was created and what it's there for. Now, this brings me to the next point of self-interest. Now that you're an investor in the stock market, you're going to be bombarded through the technology, whether it's social media, the broker you're using, just simply your interest in where you're searching online. And you're going to have so much noise come at you over the coming weeks, months, and years ahead. And most of that noise is self-interest. Brokers want you to execute more trades because it makes more money. Brokers and financial institutions create markets like ETFs, CFDs, FX, crypto, all of these leveraged instruments for you to be enticed to execute more trades because it makes them more money. I was a director of a broking business once. I've been in financial markets for over 25 years. And I can tell you right now, there is nobody that makes meaningful returns on investment in many of the markets that I've just mentioned. Your success, the wealthiest investors in the world, just simply own high quality assets for long periods of time. So do not get sucked in to the self-interest that exists. When you sit down with a financial planner or a money manager, what's the first thing they're likely going to ask you? how much money have you got? That's not because they want to help you earn a lot more. It's because they're doing the numbers in their head of the fees that they're going to make on the investment that you're making with them. And I know many of you know that because that's the reason why you're here at Trading Mastery, because that doesn't exist here. So make sure that number one, you understand why the market exists, but also understand there's a lot of self-interest. And investing is not a science. Many people think that it's a bit like baking a cake. There's a recipe and you do exactly this and the cake comes out perfectly. Investing is more like an art because when we are investing based on the law of probability. There's no guarantees that we invest in that company, it's going to turn out to be a wonderful result. But what is likely assured over time is that when you invest in a group, let's say 10 or 12 companies, there's going to be some companies in that portfolio that are going to outperform. Some of them are going to do okay, and some of them are going to do poorly. But it is not an exact science. And anyone who tries to tell you that technical analysis and this specific financial data here is going to make sure that you make clear, concise, profitable investing decisions every time, it's just nonsense. And don't waste your time looking at charts, please, because they don't tell you anything about a company. What tells you about a company is the financial statements. What tells you about a business is what it's done in the past with respect to its profitability. What tells you about a great investment is who runs the business. What tells you about a great investment is how big is the economic moat. Are the competitors going to be able to take that away? A chart or a price on a screen just simply tells you what someone's willing to buy or sell your shares for today, which you shouldn't care about. What you should care about is what someone is going to be willing to pay you in years from now. So why the stock market has so many incredible advantages is because when we are investors and global growth investors, as you are now, you can become a legitimate shareholder of some of the world's best businesses. Every day you get up going forward, you're going to have a portfolio of a certain number of companies, likely about 10 or 12. It could be 13, 14, but hopefully not much more than that. And you're going to have thousands of people around the world, incredibly smart human beings, CEOs of the companies that you own, going to work, working incredibly hard to build the profitability of those companies, and you're a shareholder. That's all you need to be focusing on. Don't focus on what the price is today. Is it up? Is it down? What's my portfolio balances? Look at the company and what it's producing and what it's likely going to produce into the future. And your job as a shareholder, yes, is to understand those businesses well, but your job is to sit back and cheer them on. Because most of the people that are running those businesses that you own now or you will in the future are a heck of a lot smarter than you and I. They run incredible companies. They sell products and services all around the world. And the longer you own them, the greater your wealth creation is going to be. I'll see you in the next video.